Good morning, everyone. Welcome back to the stream. Had a very eventful overnight. I slept through it, and kind of a muted reaction to what appears to be good economic news for the economy anyway. Actually, it's one of the news pieces of news that is actually good for both the stock market and for the economy. The inflation is ticking down, so that actually reduces the odds of a rate increase. In fact, I was looking at the projections, and there's something like a 50-50 chance between a 0 and a 0.25 rate increase for, next week, I think. But the market did not react very positively or negatively. It was you can sort of see it up on the screen here. There's your news right here. And we kind of just moved a little bit up, drifted back down. Now we're drifting back up. So I have a feeling that all this regional bank failure news is what is kind of holding everything back right now. You can see overnight during, I guess this would be the London session, we really dropped down a lot. I'm not sure how much that is. And that's around it's almost 90 points, 100 points. $95 points, something like that. So that was a pretty big move down. So what is our bias for today? I do not know. Because they're sort of, we have things at odds. The economy seems to be achieving perhaps a soft landing, but at the same time, we have a lot of regional bank scares. So I don't know what to expect. I was thinking about taking a long way down at about, let me see here, around 61. Yeah, I was looking for a short down in this area, 61-ish. But that didn't come down that low. And now I would consider perhaps a short up in the maybe 900 range, I guess. Right around 900, maybe as high as 902. The other thing that worries me a little bit is this sort of section here. That's sort of your classic Judas swing, as ICT calls it, where you get all this consolidation. Markets are open. You get this consolidation, fake out to the bottom, and then we shoot up. So if you would have caught this, you would have been in good shape. So do you short? Like I said, my short is coming up here at around 4,000. So do you take that? Don't know. I probably will. If we get up there. Hope you all did well yesterday. I ended the stream down about $60, but I did end up the end of the day somewhat over 400. We'll see what we can do today. I wonder what the fib on this move looks like. Somewhere's in this area, down to there. That puts 50% at around 13. So that's getting up into this new week opening gap. Don't know if we'll get up there or not. I think I'll take a tiny scalp up here at 99.25 if we get there. Yeah, I'll let it pass through and try to catch it on the way back down maybe. Because we could go ahead up to like 901, 902 before we return down. See, on the 5 minute, there's a tiny gap here on the 5 minute. There's also one on the 3. Yeah, similarly on the 1. Seems like it wants to come back down, but maybe not. Move this up just because of VWAP. We'll pull it back down. And there's that pivot point. A lot more aggressive than I thought it would be. If we can get our 5 points. It's fighting here. Yeah, I should just bail on this. There we go. Nice. All right. Scared me a little bit, but we picked up our 5 points. Let's look for our next trade. That trade was based on a gap that overlapped on 1 minute, 3 minute, 5 minute, all of them. Let's see here. Was it on the 15? No, it was outside the 15, but all the other ones. But it did give us a little bit of heat. I probably could have waited for it to hit the S1 and then reverse, or bought it at S1 because we did have the VWAP up there too. But it did leave that gap before it pinned back. And we also had this high here that was a likely candidate for at least a pause. Yeah, this could actually have been just to collect stops, because obviously if you went short here, there's probably a fair number of stops above this point here. So it may have went back to collect those stops, and now we're going to head back down. We'll see. It's a pretty nice move. I think we got in at 99 1/4 or something. Not a great entry in hindsight, but it worked. 99 1/4. Yeah, we're approaching 10 points here. Yeah, we just touched 10 points on that trade if we stayed in it. I'll take 5 points all day long, though. And it's going on 3 weeks. I'm still got a lingering cough, not nearly as bad as it's been, a little better every day, but still not gone, that's for sure. That gap on that trade was way back here. You can sort of see it, I guess. That's the gap on the 1 minute, but we had similar overlap on the 3 and the 5. Looks like it did just want to touch that pivot point before it reversed. Something to put in my memory bank. You can see that gap right here. At least that's the 1 minute gap. Still respecting that gap. Got 1, 2, 3, 4, 5 hits on it. Still has not closed it though. Although for this strategy, a closed gap really is not that important. But I guess the way I sort of look at it is it's just one thing to take off your table, but you need to at least pay attention to it because it will respond for weeks possibly, depending on where it's at. But if you're going to pay attention to a month's worth of gaps, I mean, you're just going to have a big, gigantic blob on your screen. It's going to be red and blue bars everywhere. So you have to, I don't pay attention to them much certainly after I've traded them, I won't even mess with them anymore. But like say if we were to go up, significantly and then starting to pull back, then they could come back into play again. But you can see we've now gone through it. So now we're probably going to visit this new week opening gap here. Probably not a bad place for another short. Surprisingly, this run up did not create any significant bullish gaps. Yeah, I can't see any on any time frame until we get. Now we have some old closed ones here, but even those are higher than where we're at. So yeah, this run did not really. Oh, wait a minute. Hang on, what am I looking at here? This is the 15-minute, so we do have a gap here. Yeah, it has not, this bar still has time on it, so we should probably add that to our indicators. Let's see here. Bar timer. There we go. So once this timer runs out, we have another 30 seconds left on this 15-minute, then this gap will display. Originally, I wasn't having these automatically put on here because I just thought it was going to look too crowded, but then I found I was spending too much time looking back and forth between the screen I had them all on and these clean screens, and it wasn't helping me. Unfortunately, it may be more crowded for you guys, but I find it easier to trade with them on all the screens. So that was another bounce off of a small gap up here at 09. I'm not going to put that one on the screen just because, but it's right around here. There's a little teeny gap that it bounced off of. Didn't slow down much at VWAP. I mean, in a large sense, it's reacting to it, but it pierced through it pretty aggressively before it reversed. And I don't even know that I paid attention to it. And again, the more I'm messing around with these fair value gaps and order blocks, the more I think that all these indicator lines, whether they're VWAP or EMAs or SMAs, that they're just kind of keeping a record of where we will respond to the gaps, if that makes any sense. to, people might say, oh, it responded to the VWAP. Did it? Or did it respond to this fair value gap up here? And it just looks like it responded to the VWAP, but the VWAP was just recording our action as we messed around up in here. And all these are just recording what's happening here. I really am not crazy about, phrases like, price will be drawn to the 21 EMA like a magnet. I'm starting to think that that's a bunch of nonsense. It's more likely drawn to the gaps. And of course, VWAP is just recording what each one of these bars is done on average over the last 21 bars. And of course, if things are reacting to the fair value gaps, the EMAs are going to follow along with the price action. Funny part is that I still leave the moving averages up there because they're like my security blanket from the last 3 years of trading. There is an old bullish fair value gap here. I can draw that. I may not leave it up there, but basically is something like this. I don't even think that people need to abandon their current strategies, and whether those are the two-legged pullbacks and so-called price action or whatever your strategy is, but maybe throw some of these these fair value gap indicators up there and just see how they line up with your strategy. That may be another level of confluence for you to add to your trade. Or not. This is not financial advice. I am not an expert, as anybody who has been watching this stream can testify to, but just sharing some ideas with you guys. And that's what I'm talking about with, like, say, here's your VWAP. Ooh, look at it. It's bouncing off VWAP, but it's also bouncing off of this fair value gap. And this value gap is not based on, all these bars. It's simply a gap in the price action somewhere where there was an imbalance of buyers and sellers. And in this case, there were more buyers got filled than sellers did, I guess is how you would look at that. I could draw this all the way back, but it goes back into here is where that gap is. like we're starting to sell off again. Didn't quite make that 50% retracement from that London session sell-off. That would have been right there at about 39.13. We got as high as 39.09, almost 39.10. We got within 3 points of it, but yeah, I wasn't paying close enough attention. You'll notice that I don't have the 3 minute up there, but the 3 minute, the 5 minute, and the 15 minute had a very nice fair value gap right here. We could have went short. It lined up perfectly. You see it ticked right into all three of those. The one did not have it, but I have the 3 minute on another screen and it's right there. The 3 and the 5 minute are pretty close anyway. They usually do have similar gaps, but after this run up, I would be somewhat hesitant to take a short anyway. You know, to add probability to the trades, obviously, you know, going with the trend. Of course, you know, in a sense, all trades are counter trend because you're hoping that they're going to, well, at least any kind of pullback strategy is based on counter trend trade, because by definition it's reversed and you're hoping it's going to continue on the way of the bigger trend. A lot of wicks on the 1 minute all the way up, you know. And that probably is why we have so few gaps on the way up, is just because it sort of just chopped its way up. Should get a little resistance right here at 85.25. there was that rejection of this fair value gap right here. It goes back to right there. I'll put it up there. A bearish gap formed right here. So if we're bearish, we could have taken that pullback. That would have been a short at 89.5. And that did make, that would have made 5 points right on the money, so probably would have hadn't ticked through it. We probably needed to tick through to get the 5 points, but it looks like we're going to do it. There you go. There's your 5 points off that pullback. It does look like we're going to continue down, though. Now this gap will be filled once this bar closes in 5 seconds. Nope, it's gonna. Looks like that bar is going to close inside the gap. There's 2 ways to calculate a closed gap. One of them is just wicks all the way through it, but the way I have it set up is to the bar has to close, and it did close. So this gap did get closed. See how the bar closes outside the gap, not just the wick. So technically this is now a closed gap. So I'll just, right there, we'll end it. And at the risk of being redundant, this is another example as you have, I think this is my 100 EMA. Yeah, 105 EMA. And it appears that it's reacting to the 105 EMA. But if you don't have this gap drawn out, that's what it looks like. But in reality, it's the gap that I believe is causing this. And we typically we use the 50% mark as what they call consequent encroachment, and you can see that lines up right at that 105 EMA. So this thing just grabbed a bunch of stops up here. There's probably a bunch of stops just lined up right a tick above this bar here. Sort of a mini Judas swing. Now anybody that went short on this bar is getting punished. Or anybody that stayed short on this bar is about to be punished. Grab their stops right here. I was wondering why these aren't lining up. It's because this one's still set to March contract. There we go. Now my suspicion would be is that we get back up to this previous high here, and then maybe we form this sort of M shape and head back down maybe. Certainly not a very clear bias this morning, at least not to me. Since the open, we've basically let's see here. Basically from the open here, this is all we've done. Just kind of stayed in this range here. This is about a 25-point range. Well, this price action isn't really giving me any confidence in any of these trades. I mean, you could just blindly trade off of the value gaps, but you can see it's even just, yeah, it's hovering around those and it's responding to it, but it's just chopping back and forth. And technically this one is actually closed anyway. Technically this one closed right there. This, you could probably pick up a scalp off of this. That's the 3 minute and the 1 minute. And, you know, if you have confidence in the 21 EMA, that's also lining up. I'm thinking this could go as low as 90 before it retraces. So maybe we let it go get to 90, see if we're right, and catch it on the way back up at 93 maybe. We are getting lower lows here. I'm sorry, lower highs. So we may be getting a bit of a change of character, but we really didn't have any swing lows on this run up. Maybe here. So this gap didn't end up closing, but you can see that it didn't really matter that much. Still responded to it. And what I was hoping was going to happen is maybe get to this consequent encroachment here, for instance, at 90. And then wait for it to reject it and then buy it back up here at 93-ish. But it already rejected this and made its move. Not sure what you would have got out of that. 3.5 points. So that did play out how I had imagined. We got down to here, rejected, and then we could have taken our long here for a nice return. We're already at 11 points, so certainly your 5 points would have paid off right there. Probably should be less talk and more trades. So this lined up with this gap here. We're still trending down, so I think we're probably going to end up passing through this gap downwards again. Looks like it still wants to play for a while here. Can leave these gaps extended too. Let's see here. Somewhere in here. I thought I had that clicked and I don't. Maybe I can't do that. It's just getting kind of messy in here. Kind of just bouncing between these two gaps for now. But you play these basically the way you would do any moving average. You know, for instance, right now you would possibly take a short off of this from coming up from behind. The other thing is if we have a run up, pull back to a bullish gap defined by the bar that passed was it a green bar or red bar that caused the gap. Likewise, the other way around, if it was a red bar that caused the gap, that would be a bearish gap. So we pull back into that gap and we take it long, just the same way you might do with a 21 EMA or whatever. And this is I got to get rid of some of the crap on here. This volume profile, I don't use that. I don't use cumulative delta. Anyway, so, just a quick look here to see if, we had some second entry. Here's a short here. So that lines up perfectly with I'm looking on the, you can even see it on the 15-minute gap. See right here. It lines up perfectly with this second entry long. I'm sorry, this second entry short. If you use your two-legged pullback rules, this was a decent, the triggered bar was not ideal, but it is a two-legged pullback, second entry short off of this 21 EMA, and that you wouldn't have gotten in till way down here, whereas the fair value gap gets you in right up here. So you're out of this trade before you would have even gotten into it on a two-legged pullback, but just a thought. I'm also sort of experimenting with this idea of taking 5 points a day and being done, which is what we've already done on 2 accounts. So overall, we are up $500 on the day. Half of that is on a PA account, and half of that is on a evaluation. So 5 points that I copied from, over onto another account, 2 counts. So technically that's 10 points, but I only counted as 1 because they were traded together. So we're coming back into this 1 minute gap again. So right now we're just kind of ranging, but we're also forming this wedge here. We'll see what happens with that. You would think that we're heading towards a breakout in one direction or the other. The big picture still points towards a downtrend if we're looking at the London Open till now. We never quite got that 50% retracement on that, and we may not see that. Now the other thing is that they could bring it down here to accumulate some orders, and then take it back up later on in the day. in the afternoon session. Looks like we might be breaking to the downside here, possibly. Or it's just an overshoot. If you don't mind reaching out and hitting that like button, I'd appreciate it. I think one of the problems with this channel is it's stunted by the fact that it's nothing but these long live broadcasts. And I think I need to make some smaller videos, maybe explaining my ideas on some of these trades and post those. Maybe it would be more advantageous to the channel. I don't know. Didn't help that I took off for 2 weeks and posted nothing. My biggest viewers were on that little short that I made about my panic button that I made. Like 180 something views on that. Nope, we had a bit of an overshoot and we just immediately reversed. Trying to see something that caused this reverse here. Nothing on the 1, 5, or 15. Maybe it's on a higher time frame. Let's see. I think I have a 1 hour here somewhere. Nope. 4 hour. I'm on another screen. Oh, 9:30. (10:30) Eastern. I'm in the Central Time Zone. Nope, I definitely don't see any gap that caused that reversal. Wait a minute here. No. you look at these moves, I mean, you could have almost blindly taken these trades and made money. I mean, right here, like, this is the 5 minute. Got a gap here, rejected. This one here, you took a little heat, but it ultimately rejected. This one here, to the tick, rejected. Same thing on the bullish side. Came into it, hit the middle of the only reason that one might not have worked is because it never got back to that 50% consequent encroachment area. Yeah, it didn't quite make it to the middle. Maybe we can extend any of these out. There's about 50% there. 50% there. These really should be red. But like a lot of strategies, you're probably best to take it on the first try and maybe even possibly the second. But beyond that, eventually it's going to fail because it's got to, obviously it's at some point in history it's going to go below that bar. I mean, look at this one. It's like to the tick. Yeah, looks like we're heading possibly for a... oh, I'm sorry. I thought that was the low of the day. This is the low way down here. 65. It's about 20 points, but we could be heading there. This could have been the accumulation. And now their goal is to get back down to new low. Obviously, it won't be a straight line. kind of just stuck in this gap here for now. And you know, it's hard to tell when I'm not, haven't completely mastered this idea, but the idea that the market makers will start to accumulate orders down here, for instance, and then they'll take it up to make their money. Obviously, there a lot of people have shorts down. Stops on their longs here. So they come back here and they picked all those up and then immediately reversed it. Now, will they take it all the way up? We don't know. Well, somebody might know, but I don't know. So the possibility is that they still are coming down here to pick up even cheaper orders, and then in the afternoon take it back up. Like right now, we're almost like dead center in this, so it's not clear to me if their intention is to load up down here and take it up, or load up down here and take it up. Consequently, but alternatively, they could take it back up here, start to accumulate up here, and then take it back down. Who knows? Right now, we're right in the center, so it's not obvious. Very slow price action today. I mean, it's moving and it is obviously trending. We got lower highs and lower lows, but it's painfully slow. I'm just glancing over on the 5-minute. We've got some pretty long wicks on the tops of these bars. Same with the 15. Every rise in price is giving it all back on the before the bar ended on for the last 45 minutes. Actually, the last hour. This is pretty slow and choppy. I don't know if we'll get another trade in the next 20 minutes or not. I don't see a lot of places that you would want to take a trade here. This is the 5-minute. We have a gap down here, perhaps. We don't have another short that I would be interested in at the moment, all the way up until we got back to like 908. Let's look at our 2000 tick. I promise I will clean this up one of these days. So much on here that I don't even look at. I don't think I've ever put the gap indicator. Let's try that just to make things even more cluttered here. crap, that's going to take a while. It's because there's so much shit on the screen. Well, that might be the next 15 minutes. We'll see. Sorry about that. Didn't think that through. Luckily, this is in a very slow period at the moment. Yeah, they're all frozen now, so gotta wait till this thing finishes calculating. I should know better than that, because we're actually all the way down where we've already breached this, haven't we? I'm looking on another computer. Are they down at like 83 or something? Wait a minute, is that right? $50 and a quarter, right? Yeah. I have moved to the June contract, which I think most people have at this point. I think the volume is definitely higher on the June than the March. My guess is we're heading to about 58.75. I'm really sorry about this stupid chart here. I don't know how long that's going to take, especially because I have so many indicators on that particular 2000 tick chart that it's renewing all of them at the same time. I think what I'll do is from here on out, I will also have my trading view available so that we can at least watch this at the same time. I have that running on another computer right now. Yeah, I'm going to mark on my chart 58.75 as a possible, either as resistance if we end up in a short, or possible reversal when we get there, at least for a scalp perhaps. If you do me a favor and hit that like button if you're getting anything from this, even if it's just entertainment for your morning, I'd appreciate it. Trying to increase awareness of this channel, for better or for worse. I appreciate any help that you can give me. Also, let me remind you that I'm trading on a funded and with a prop firm, apexfundertrading.com, Apex fundedtradingtrader.com, something like that. I'll have to double check that. But yeah, if you use my code, you're going to get 80% off until like the end of the month or something. I'll put it up on the screen here. If you use that code, you get 80% off, and that's lifetime. As long as it takes you to pass your evaluation, you'll get 80% off each month. So it makes it pretty damn cheap. There we go. I think it looks like it finally updated. I don't even remember why I loaded this at this point. Oh yeah, we were trying to see if these lined up with our second entries. I don't even want to mess with it anymore at this point. We'll do that a different day. All right, so this is back now. It's the 1 minute. Here's the 3 minute. Anyway, like I was saying, if you want to take advantage of that 80% off, obviously everybody who's streaming's got codes for this, but if you use my code, helps out the channel a little bit. Doesn't cost you anymore. Double check what that is. You think I would know it by now. It is apextraderfunding.com. There's a link also in the description that'll take you directly to it. Well, this is difficult to trade, I would say. Possibly we could be looking at maybe something down here, but I don't know that I'm particularly confident in it. Maybe 69.5. We'll get a little bit of a bounce. You probably could get 5 points out of that. These are pretty big bars. That is a 15-minute chart though, so we're going to have to drill down to see what that would look like, because you can see here it responded to it, but that's a pretty good sized gap. I mean, not a gap, but a pretty good pullback. You would have taken quite a bit of heat. Yeah, that's almost 5 points of heat before it reversed, and that's mainly because it is a 15-minute chart. So what does that look like? Let's call it 3870. Yeah, you see, if we go down to the 5 minute, we're probably better off waiting for it to get to 63 to avoid that big drawdown. And maybe it doesn't even happen, but let's see if that lines up with, like, say, a 1 minute anywhere. Yeah, I don't see any. I don't see anything on the 1 minute to help us out there. Because I mean, it's kind of like with other strategies too, where you start at these higher time frames, see where we might be interested, and then start drilling down to see if there's any confluence. And you can see on the 15 and the 5 there is. So that will help us. Instead of jumping in at 70 here, we'll wait and either let it get down to 63 and then catch it on the way back up, or just dive in at 63. What would even be nicer is if there was a 1 minute confluence. If we went back far enough, let me take a look. Hold on, I'm gonna look on another computer. D3, let's see here. 63. Yeah, I don't see any 1 minute gaps, but I do see some order blocks down there. So this could probably be a pretty good trade right here. Probably would be inclined to let it come all the way down to here. And then maybe 63 to 69, that's about 6 points. I'd probably be inclined to just take it here. Right at like 63, 62.75, something like that. 863. Yeah, I think right in that area is pretty good possibility. She taken off. And again, this is all still somewhat anecdotal for me, but you know, you would have expected some resistance if it was running up into this 21 EMA, but you see it blew right through it. And part of the reason is possibly, is that there are no gaps here. So there was nothing to stop it from a gap point of view. So it zipped right through the 21 EMA until it hit a gap. You see on the 2000 tick chart, here's our gap right here. So it would have been approximately, say, 50% of that. And that's exactly what it reacted to. And now it's pulling back into this bullish gap, and it's meeting with some resistance. That doesn't mean it's not going to go through it, but you can see it paid very little attention to the 21 EMA and didn't slow down until it got to this gap. Food for thought. What you're basically listening to here is my stream of thought. It's really not advice. It's not even fact. It's just my stream of consciousness that I'm thinking through and trying to whittle down something that resembles a strategy that I can stick to. And that doesn't mean I'm not trying to incorporate it with the other things I've learned about other strategies, including two-legged pullbacks and things like that. But, if you put these together, maybe we have a working strategy then. Or, just to shore up the strategy we already have. Because I don't think there's any question that, the two-legged pullbacks are effective, but why do they fail sometimes? So, maybe we can figure out a way to reduce the number of failures by lining them up with these gaps and order blocks. Speaking of which, there was a nice big order. Well, there was an order gap at 73.5, and we did not get there quite. Yeah, 73.5. There's an order gap. It's back here. It took off like a hot potato. Is that even a phrase? Is that a thing? Took off like a hot potato? No, I think it's dropped like a hot potato. Well, I don't know what to make of this now. It looks like maybe they were accumulating. I mean, we have some, an area here back here that's similar to here. So did it come back here to get a bunch of orders, and now we're heading back to the top? It sure kind of looks like that, doesn't it? Might get a little bit of resistance right up in here. 95.75. Tell you the truth, if it gets through there, I don't really see any resistance to. This gap here. This must have been a gap on a higher time frame because I don't see it on the 1 minute. We just must have manually drawn it in. Right now, we're right in the middle of a order block. Center of this order block was at 94.5, and look at that, bounced right off of it. Apparently the order blocks behave very similar to gaps. As do you say, I didn't even mention these, and if you're not familiar with them, these orange bars that I put up here, NWOG, that's new week opening gap. That's just the gap between the Friday close and the Sunday evening open. And then we have these daily gaps too. This is the new day opening gap. That is midnight Eastern to 8:30, I think. I have to double check that. I think that's what I calculated that. But it's basically the gap from the overnight. I think it's midnight until 8:30. Anyway, those behave similar. Not so much about that's where things resist, but that the price will be drawn to those areas. They'll want to test it again. at some point. But yeah, it definitely bounced off the center of that order block. All right, guys. Well, it is 11 o'clock Eastern, and I think I'm going to kill the stream here. I'll probably continue to trade for a little while, but maybe not. We'll see. I hope you gained something from this or had some sort of enjoyment of it. Don't take it as advice, obviously. Don't copy my trades. Don't do anything based on I do here other than maybe look into some of the ideas that I throw out there. But other than that, I want to thank you for tuning in, and I will be back tomorrow morning at 9:20, 9:25 Eastern. If you hit that like button, subscribe to the channel, and also hit the bell icon, you'll be notified when I go live each and every day, Monday through Friday, unless I don't. Actually, now that I'm thinking about it, I will not be streaming on Friday, Monday, or Tuesday. I will be out of town for those days. So after tomorrow, I won't be back until next Wednesday. But I'll remind you of that later. All right. Thanks a lot for listening. I really do appreciate it. And I will see you in the morning.